Alright, so I wanted to explain the pre-market standard deviation leg model. It's not necessarily a model, it's more of a way of anchoring your standard deviation levels. But I learned it from Oxy before he went on his ping pong LARP rampage, whatever. And then he was, before that he was teaching this model, and he was actually a pretty good teacher. I'd say a little better than Dutch even. But we all know how that went. And then I went to TIG later, and when I got closer with TIG and talking about shit, talking about trading and stuff, found out that this was actually TIG's old model, which is a little spin-off that Oxy made. But yeah, this is essentially what you do. You come in and you mark the pre-830, the last swing high, swing low before 830, right? And Oxy said not to count the 830 candle. I don't know. I feel like every time I didn't count the 830 level, I missed out on a good trade, and I took a shitty trade. I feel like, for me, personally, I do anything from pretty much 8 a.m. right here to 9:30, right? So this would be my zone for entries. This to this, pretty much. And this would be my entry zone. Not entry zone, but my anchor zone, right? And essentially, you mark this out. You can see -2 got hit. We had a little rejection block, reaction, I guess you could say. Little rejection block, trade right here. We make this 2-minute rejection block and tap CE, and then pretty much could have caught high of day right there. Now, the way I would take these trades, when I take 2-minute rejection blocks, I don't really take the CE of it, because a lot of times we might just come down to the quarter mark instead of coming all the way to the CE. And I would essentially just take from the start of the rejection block or the top of the body, and that gives me a good 10-point stop. And whenever you're targeting this with this model, you're essentially targeting the 1 or the 0.5 for higher probability, but you're targeting the 1 right there. And yeah, that's pretty much the model in itself, or like how the pre-830 model would have played out. However, this model also caught low of day. And how did that happen? Well, because you could just reverse anchor this. And when you reverse anchor this, you get this right here, -4.5. And that catches 497, which is pretty much low of day right there. And you would have gotten multiple good trades. I see a rejection block entry right here with the -3.5. Don't really see an entry here on the -4.5, but you do have a good reaction from the -4 and -4.5. We have pretty much low day. And yeah, really simple way of trading. However, for me, like I said, I trade from 8 to 9:30 is my anchoring zone, and I like to take the last manipulation leg, or if there's multiple manipulation legs, I like to mark them all out together. Now, this was the manipulation leg that I had marked out. I also had this one marked out. Excuse me, voice crack right there. Right there, boom. So -4.5 and -4.5 right here, they align because they're within 5 points of each other, and they would have caught low of day. Using the pre-930 manipulation leg, you would have caught a better entry in the -4.5, but I didn't even take a trade today just because I didn't really see anything, and I didn't even look for anything. I was too sick. But we have this, anything past 12, okay? Let's say it's past 12, I think. Yep, right here, past 12. Right, there's the line right there for the 12 o'clock mark. Anything past this, we could look for another intraday manipulation leg. Now, we have, as you can see, we have New York PM opening right here. And I would mark this out right here because this looks like a good manipulation leg. It's the highest manipulation leg intraday, which gives us -2, which aligns with these. And then the pre-New York PM manipulation leg, which essentially would be this right here. Holy shit. Please let me mark it out. What the flip? Anyways, there we go. And that gives us the -3 that aligns with this. So essentially, we have all these standard deviation legs lining up, and as we open, we start projecting much lower. So I would probably, like, after 12, I'd probably, not really look for any trades since we hit the -4 and already reacted well. I would have thought that would have been bottom of the day, but there was other confluences lining up with 495, 496-ish, which would have made you think that all of these standard deviation legs lining up right here, and you take just the middle, would give you 493, right? Which would have been bottom of day or low of day. And then you could take the rejection block entry right here, which is really simple. You don't have to look for CE. If you want a better entry, you just take this, right? And 10-point stop. Yikes. Or whatever. 10.5 point stop, I guess. It's not letting me. Holy shit. I hate freaking recording on my phone, man. But, targeting the one of the standard deviation level, right? And there you go. This would have caught you 12.5 R. Really, really simple model. It's just aligning your standard deviation, looking for a rejection block entry, and yeah, targeting the one. It's pretty much almost mechanical. It's really solid, and if you line multiple standard deviation levels, you get pretty good trades, pretty good levels. Like this -4 aligning with this -4, catching this would have. I genuinely would have thought this was low of day. But again, I didn't trade, and I guess you could say I got a little lucky and didn't really risk losing anything and didn't risk catching anything. I don't know. But yeah, that's the model, or the pre-market standard deviation anchoring model. It works pretty solid. Like, it works pretty well. It shows up almost every day. The only thing is, like, will you catch a good trade every day? Like, will it present itself this clearly every day? Only thing is, I was sick today, so that's why I didn't even, like, I just looked at the charts. I was like, I don't see anything that's, like, really clear. But if you look for a little bit, right, you can align this all and catch really good trades.